Hi, Peter Rose, Longwood Currency Trading. I wanted to tell you a brief story about a lucky trade that I had last night where I made 2.5% on my money in about 1 minute. So I had traded during the day and I was up about 1.75% or something like that, and I was pretty close to 2%. And instead of shutting the trading platform down, I just left it on and went about my business or whatever. It got late in the afternoon and got a fire going in the wood stove. It's mid-February here in 2021 in New Hampshire. And so I just went about my business. So we had dinner and sat down to watch a movie on TV. It was about, prior to that, I got to go back and say that there had been such great volatility during the day, which allowed me to get almost 2% on my risk in a few trades. I think the whole thing took me about 45 minutes or an hour to do that. And so I had put some feeler trades out there, staging in trades, just on the outside chance that price would continue on its long-term trend. I had done a counter trend trade for about 1% earlier in the day that did a trade with the trend to get picked up another percent, about 0.75% or something like that. And so I had thought, well, this really looks strong for a good strong overnight move, and so I'll just put some limit orders in there and see if we get hit. And you know, if they go off during the night, my phone will let me know and I can get up and manage the trade. So I didn't think anything of it. So I had that set, and we had dinner, like I said. Sat down, we were watching a movie. It was about 20 after 8, and my phone goes bing. Well, what the hell is that? Who's trying to text me at 8 o'clock at night? So I pull the phone up, you know, and I'm looking at it and I go, holy shit, my trade got triggered. I'll just, you know, that's all right. It was a single full lot, so I'll just let that ride. It wasn't but 10 seconds later, bing, the phone goes off again. Now I got 2 full lots running. I told my wife, I said, I better go in and see what the hell's going on. So I go in and I sit down at my desk, and the price is just rocking it up. Just as I sit down at my desk, bing, I got a 3rd full lot go off. Holy crap. So I'm 3 fulls onto this thing, and price is rocketing like a banshee out of hell. I go, this is not sustainable. I had a profit target of, you know, way up, a substantial profit target, and the thing was screaming toward it. I did what I always do at this time. I dropped down onto a 5-second chart, and I wasn't even having time to look at the 5-second. I could see the price coming back down. There was a pin bar forming, and actually the price shot up 70 pips in under a minute, and that's what took my trade back in, and it was dropping like a stone. I just did close all open orders, boom, shut that fucker down, and got it was about it was a little over 1.5% or something like that. With a 37 pip retracement, I would have lost all that gain, probably been down. I mean, I would have made some money, but certainly not the amount that I did, almost 2% on that trade. And so it just, I mean, it was just boom, it was just like that. Actually, that trade I get 2.5% on it. I was like 0.75% or something like that earlier in the 1.4. I ended up the day a little over 4% up, all right, based on this trade. But I just said, well, I really got lucky on that one. I projected that the price might go up, and so I was just really lucky that I got that 2.5% on that wild volatility ride. If the price would have turned around and crashed and gone way down, then my limit orders would have never hit. I wouldn't have been in a trade. I wouldn't have worried about it. And if I would have checked the charts after that with the limits going way down, I would have just canceled the open orders, because I don't like to do carry trades. I don't want the thing going off at 1 o'clock in the morning and I got to get up and make a decision as to what I want to do. So I could say that in about a minute, a little over a minute, I made 2% on my risk. So that's not skillful, that was lucky. And yet, at the same time, if I wasn't skillful, then I wouldn't have been lucky. And I think we really have to look at stuff like that. And the first is a caveat or a warning about making 4% within basically about a day's period of time on your money. You start feeling like you own the fucking world. And after I made that it was about 8:20 at night, in 1 minute, making 2%, 2.5%, I could very well have sat down at the trading platform and tried to squeeze a little bit more juice out of the market. And yet what I did was, immediately after closing the trades, I shut the trading platform down and went back and watched the movie. That's a very skillful thing to do, is to not get swept up in the emotion of all that. And that takes me to my next point, where you don't really attribute a day like that, or a 2.5% run that you capture as lucky. The problem is you think you're skillful, and you're not skillful. You didn't do any fucking things skillful to make that trade go for you. You were in the right place at the right time. Ansel Adams says the mark of a good photographer is knowing where to stand. The mark of a good trader is knowing where to put some orders that have the greatest probability of getting hit and fulfilled. Not just getting hit, but also getting fulfilled. And that gets back to a discussion of momentum, and that all takes skill in order to evaluate, to make sense of, not luck. The fact that I got lucky was the result of my skill, of the work that I put in over the years. Now, as you know, I've been studying these markets since 2007. I didn't start trading live until 2012. Did mini lots, and over a quick period of time I lost both of those mini lots and decided I needed to do more study, and didn't open my live account, large live account, until 2017, 2018, something like that. I don't remember what it was. But that was the $40,000 that I lost. But you could look at that and you could say, well, wait a minute, what the fuck's the matter with you? You started studying this stuff in 2007, but you didn't open your large account until 2017, 10 years later. What's up with that? Are you stupid? Well, no. I wasn't really interested in trading when I got into the currency markets. I was interested in the currency market. And as a computer applications developer, I spent a 33-year career doing that, as you know, and I spent 40 years as a real estate investor. I'm interested in shit like that, okay? So when I found the currency markets, I studied them, and I did all this analysis, and I started writing computer programs to plot prices out and all that. But that's what I do. I don't trade. My trading was the real estate. That was my alter ego there as a real estate investor. So I wasn't looking to trade the currency markets. I was looking to, as an academic exercise, to get into the currency markets and to learn them and all that other stuff. So between 2007 and 2012, I did all this research and did the computer simulation stuff. I go, well, maybe I could make this stuff work. So I'll fund a mini account, and we'll just get in there and we're going to try it. I tried to learn this stuff on my own. The problem is I wasn't learning how to trade. I was learning the academic aspects of how do you program moving average crossover systems? What is the probabilistic outcome of a matrix analysis of 400,000 runs through all the different combinations of crossover systems and all that sort of stuff. Those were my academic pursuits. I wasn't learning that stuff or studying that stuff to be a trader. I was doing that as an academic exercise for programmatic solution and all that other stuff. So I didn't look to anybody else to learn how to trade because I know how to do what I did better than anybody else knows how to do. So I didn't fucking need anybody to do that. And I thought that based on the experiences that I had, that I should go in and I should try to actually trade, see if the theory matched the reality of it. And because I hadn't had anybody teach me, and all I had was all these books and the videos that I've been watching and all that stuff behind me, which really is not the way that it really is, particularly if you're a beginner. So that's why I lost. But I didn't attribute the loss to the real reasons. I attributed the loss to not knowing enough and going back and rewriting those simulations and doing more involved simulations, doing probabilistic analysis simulations, and blah, 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 on and on and on it went. I have like 8 computer applications that I wrote that deal with price simulation analysis and all that other stuff. And as you know, I wrote a program where I can download my broker's transaction settlement statement into my program. It parses through all the data and creates transactions, and it codifies those transactions into positions, and then prints out P&L statements and does tax form preparation for transactions, because currency transactions are not handled the same way that stock transactions are. And most accountants, when I put my first transaction report to my accountant, there were 600 transactions there on a mini account, okay? 600 transactions, and they charged me $750 to prepare the transaction report. And they didn't even do it right. They didn't know what the fuck they were doing. And they didn't get the number right. It didn't match up with what I had, but $750 to prepare a mini report transaction, that was stupid. So I wrote my own program to do that, and that's what I've used to send my tax forms in over the years. So I wasn't really studying how to trade. I was still wrapped up in the academic theoretical process of it with my thumb up my ass. So when I got into 2017 or 18, and I thought, well, now I've got this. I pretty well got this figured out. Instead of opening the account with another mini, I opened it with $40,000 because I had done so much probabilistic analysis on the methodologies that I had done that I had faith that everything was going to work out. One problem was I went in, I was over leveraged. The second problem, as you know, if you've done anything, watched any of my videos or read my blogs, is that about the first 6, within a very early starting when I loaded that, I mean, in my first transaction I made $1,200. And then I think I lost a couple $100 and I made a little bit, but whatever. Within a very short period of time, within the first week or 2 weeks of trading, I had that proverbial 6 losses in a row. And because I was over leveraged and didn't de-escalate the number of lots that I was trading as my account deteriorated, those 6 losing trades, they were like $4,000 or $5,000 a pop. And I just went in the toilet really fast. So did I know how to trade? No, I didn't know how to trade. But I was left with $5,000 in the account after that. I took a break from the trading, went back to the analysis, went back to figuring things out, figured out that none of that shit that I had done in the past, all the computer simulation was a waste of time. Reading all those books and watching all those videos, that was a waste of time. In about 15 minutes, I figured out what the issue was. And I went in and applied that to that $5,000 account and doubled that in, I don't know, it's 5.5 months, something like that. And so I figured, okay, I've got the base set of rules going on. So I guess the long and the short of this is we have to be very careful when we do win a series of times in a row, or we do win a 4% hit at some point, or we pull a 20% month, or whatever it is that you're going to do. And you start thinking, oh man, I got this stuff by the nuts. I'm on this. I can do this. You can't. That's not sustainable. If it was, then there'd be folks out there that start from nothing and amass, millions of dollars in a relatively short period of time. Now, the fact that there are folks that there's one trader out there. He runs a large trading organization, and he took 5,000 and turned it into I think it was, I don't know what it was, a couple $100,000 in 6 months, and then he took a $400,000 thing and ran that to 32 million. Or actually ran it to 1.8 million in 18 months. I think that's the number. And then ultimately ended up making something like $32 million. And of course, what he doesn't mention is that he was using probably 500 to 1 leverage, and he was lucky, and he had worked in a trading room before, so he kind of understood what they were doing. But regardless, that's an anomaly. That's a 5 standard deviation out trader. Or he got lucky, and I guarantee you what, you watch some of the videos, and he ain't trading the way that he was trading back then. He's all this conservative, don't risk more than 0.25% of your account in any trade. You got to do this, you got to do that, and it's all this bullshit that he didn't do when he was trading, learning to trade, and getting started. Because the more money you have, the more fear you have of losing it. When you don't have any money, you don't have any fear, because what the fuck are you going to lose? You got nothing at risk. Oh, man. So the issue here is I'm not patting myself on the back because I pulled a 4% day yesterday, and then sat down at the computer today, and I've made 2%, I think, today. And I did that in 2 15-minute spurts. But that's just the forces of nature and my past knowledge and skill coalescing together in a probabilistic sense and saying, well, if I could lose 6 times in a row, I can certainly win 6 times in a row. And so I've had those, 6 wins in a row, or how many of the transactions were between yesterday and today. And I think I did 3 trades today, and I did like 6 or 8 yesterday, something like that. 5 trades. But I can't pat myself on the back and say, geez, look how much skill I have. But I can't beat myself up and say that I was lucky. I was lucky that I had a good series of runs today, because it makes me feel good, and it eliminates some of the losses that I accumulated this much, which were substantial, because I let a couple of trades run totally against my rules. And I'm listening to these guys out there that have these long stops, and I'm thinking, oh man, because you got to remember, I've only really figured the rules and stuff out since around 2018, 2019. So for knowing what I'm doing, it's been a relatively short period of time. And that was a learning process. When I finally figured out what I was supposed to do, that didn't necessarily mean I was going to all of a sudden become astronomically profitable, because I had so many bad habits from before. And I've gone over those in videos before. So I guess if you're starting out in your journey and you make a few trades and you make some money, don't pat yourself on the back. Look at the statistics involved. Corresponding to that, if you lose several times in a row, don't beat yourself up about that, because maybe you hit those expected series of bum trades. You got to look at the trade. Look at the trade entry, because that's really the key to the thing. If you make shitty trade entries, nothing's going to go right for you. You know. And so you have to analyze, did you get caught? Do you have a good system but you got caught? Or do you have a shitty system and you got caught? I mean, those are two big different things. So if you have a bad trade entry system that creates your losses, then fix that. Don't get emotionally involved in it, which is the problem. Because what happens is that you run those losses and you feel all beat up, and then you take risks that you're trying to make up. You're doing anticipatory trading. I've done videos and blog posts on doing anticipatory trades. Oh, I think the thing is going to go up, so I'll get in right now. Oh, man, I've lost a lot of money doing that. And you're doing revenge trading, and you're trying to get back. You're trying to find a juju, the magic juju sauce that's going to make things work. And so you're throwing shit against the wall to see what you can do. Because you got lucky once, why can't you get lucky again? But it isn't fucking luck. It's you don't have a good system, so you're doomed to fail. The only way that you change your luck is by developing your skill. So you do have to do some work. So don't look at a book and don't watch these silly videos and think that you're going to learn how to trade. Find somebody that you can run what you're doing by them, so that they can turn around and say that you're full of shit, or yeah, you got a pretty good start to that, you got a pretty good idea, but why don't you try this and why don't you try that? That's what a mentor does for you. I didn't have that when I started. Trust me when I say, if I would have had the right mentor, I wouldn't have lost $40,000. I might have lost $10,000, but I wouldn't have lost 40. In fact, I doubt I would have lost 10, because I would have gone back and I would have started trading one fucking mini lot until I could make sure that I was doing a decent percent return of that on a monthly basis over a long period of time. The fact that I was in the simulated account and was running, 6 months at a time, 15% a month in different spurts and sets means absolutely nothing, because that's not the real market. And this is such a tremendously potentially profitable career that you can become involved in as a currency trader, that you would be foolish not to take advantage of learning the skills in the proper way so that you could make money doing this. Look, if you could make 12% a year in currency trading, you'd be a fucking hero. You know, you might make 12% a year or 15% a year in real estate. That's if your mortgage is low, so that the income from a rental property is paying you cash flow that you're adding on to that appreciation value at the end. Look, real estate over the long term is going to come up at 8%. I mean, that's just the way it is. Today, it's probably going up 10 or 12 or some places maybe 15% a year. Well, that ain't going to last. It never does. And when it comes down, it'll come down like it's always come down. I was living in a $250,000 condo 5 years ago, 6 years ago, and then when the real estate crash came, I didn't need to sell, but I was looking at selling off part of my real estate portfolio, getting ready for that, and because I had sold one property and just getting ready to move from there, and then whoosh, the market comes collapsing down, and I thought, well, geez, I want to move from this condo. I don't want to move now because I knew that the value had come down from $250,000. And it was going to be like a year or 2 years before I was looking to retire and move anyway. But I had a real estate agent come over and give me a property appraisal. If I had to put it on the market and sell it today, what would I be able to get for it? It was $250,000 at one point. You know the value that came back? $150,000. Come on. You know you're going to lose $100,000 on a $250,000? That's a big hit, man. So don't think that doesn't happen. And when you're going into in those market cycles, it's about every 10 years that'll happen, that you'll have a drop in real estate. But when that drop comes, it's significant. So why not learn and to get in to real estate today, if you're going to do investment, you need 30% down. I don't know. The banks are crazy right now. You may be able to get in with 20% down, or what do you want to do? You want to second mortgage your house and put that money out too? You know, you could be as stupid as a duck if you want to, but you're going to still have to come up with 20% of a $500,000 investment property or whatever. You're not gonna buy a 4-unit apartment building for $150,000 unless it's in fucking Podunk, Arkansas, and or you know, Biswak, New Hampshire, where you can't even get more than $100 a month or $150 a month rent per apartment. I mean, everything is relative for the area. But if you're going to be buying an apartment, I just sold an apartment building for $600,000. So, you know, that's a 4-unit. So, for that guy to buy that $600,000, you didn't have to come up with $120,000. You can get in the currency market for $1,000 and trade minis. Well, you can get in for $100 and trade micros, but you're foolish to even think about doing that. If you can't come up with $1,000, don't even bother to think about getting into currency markets, and don't call me. I'm not going to talk to you if you're trading micro lots. You got to put enough money up there so that when you lose, it's going to hurt you. So if you lose 2% and you lose $20 on a $1,000 mini account, that's $20. You lost 2%. That's a fucking pizza, and that hurts. Doesn't hurt me. That's why I get screwed up. I've told you that on videos before. But get over this luck thing. It takes skill. Now, does that skill mean you have to know about fundamental analysis? You know, here I am. I go on these videos and I talk about the need to know the economic differentials between the two pair currencies, and you need to understand a little bit about technical analysis and where it's applicable and where it's not, and what different currency pairs do, and how the economies affect interest. Do you have to know any of that stuff? No, you don't have to know any of that shit. You have to understand that it's out there so that when you become impacted by it, or the charts are displaying some wacky action you haven't seen before, you've got some vague idea of what could be causing that. All you need to do to trade could take you 2 weeks to learn how to trade the right way. And it shouldn't cost you $2,000 to learn stuff that you can learn on Baby Pips for free. You get some course that's only teaching you beginner stuff, you're wasting your fucking time, because the mechanics and the plumbing are free. Find somebody that knows how to teach you how to trade, not how to learn the mechanics. Oh my God. Because otherwise, all you'll be when you win is lucky. It's fun to be lucky when you know that the skill brought you that luck. It's a feeling of guilt when you're lucky and you're really not sure that you did the work to develop the skill to back that up. Peter Rose, Longwood Currency Trading. Have a great day. Have a great trading day.